All right, welcome back. This is Module 3, where we're going to be talking about finding those rental investment properties. We're going to chat about where to look, how to find them, and how to reach out to the owners to see if they're interested in selling you their property. It's time for that quick disclosure again. I am not a licensed attorney, accountant, financial advisor, real estate broker, or real estate agent, or any other licensed individual for that matter. Even if I had a license, I'm not acting in that capacity today. Therefore, I'm not going to discuss or provide any specific counsel, advice, or instruction that would apply to specific individuals. This presentation is intended to be general information. I recommend that you engage the services of professionals in making decisions that have a legal impact, especially financial decisions. So as we talked about in the introduction, we are going to be using the Deal Spotter system for the first part of this course as we go through the process from finding that rental property all the way leading up to closing on it and purchasing on it, because it covers everything that you need to know from identifying that potential rental property all the way leading up to the process of closing on it, buying it, owning it, and renting it out for potential cash flow. So you're asking, where do I find my rental properties? Well, the perfect rental property usually is in a high demand, low supply area. This makes them easy to find, and usually the rental market is pretty stable. We're looking for places with a stable population and low growth so that prices aren't being driven through the roof. You're usually looking for a newer home or a home at the beginning of its maintenance cycle, which means maybe they have a newer furnace and a newer roof and a newer water heater and newer appliances, so you're not having to fork out cash to repair or replace these things a few years into your investment. Look for a location with a positive political environment, something that's landlord friendly. The last thing you want to do is get caught up in a lawsuit in a state that favors tenants. You want to set yourself up for success, so look for a landlord friendly environment. I would avoid HOAs. Usually that comes with a higher cost, which creates an obstacle for cash flowing on your rental property. Let's talk about the lead generation sources that we use. We focus mainly on distressed homeowners. And the reason we focus on distressed homeowners is because we can create a win-win situation. Now, as real estate investors, we need discounts, right? We can't be buying stuff at full retail value. We need to go find homes that we can pick up at a discount so that we can cash flow. Your normal homeowner who's current on their mortgage and loves where they live and has built equity in their home is probably not that excited to be giving you an extreme discount on the sale of their property. So we look for people that are in situations where we can come in and solve their problems. A lot of people who are going through pre-foreclosure or going through divorces or have had a death in the family or are facing bankruptcy are in a situation where their real estate is causing undue stress. These are the people we talk to because these are people that we can help out of their bad situation and usually create a win for ourselves in the form of a discount on the real estate. So absentee owners, bankruptcies, free and clear houses, high equity houses, low equity houses, high rate of evictions, pre-foreclosures, probates, houses that are upside down on their mortgage, houses that are contaminated with meth, divorcing families, property tax delinquencies, vacancies, expired listings for sale by owners. These are all great areas to look for potential rental properties. And a lot of times these are opportunities where the homeowner is in some sort of discomfort about their real estate and we can create that win-win scenario. Where do we find these people? My favorite place to look for these types of individuals is county record. Now, whether you're working with the recorder's office for things like property tax delinquencies, or the courthouse for things like bankruptcies and foreclosures, or the health department for things like meth contamination, you're going to be able to find public record of addresses and individuals who need your services and your help. There's also an opportunity to create some inbound marketing. Now you can do this through things like direct mail, sending out postcards and mailers to people, offering to buy their house, and call people who are potentially facing financial hardship. Things like bandit signs, putting signs out on the street saying, we'll buy your house cash or we'll take over your payments. There's always that good old knocking doors. My wife, Maylee, loves this strategy. She has a background in knocking doors from years of selling alarms and solar. So she's adapted that same strategy to go out and find rental properties. She'll knock the door, have a conversation with the homeowner, and it's turned into many, many deals that we've added to our portfolio. A lot of times sticky notes are a great thing. You can write a little note on a sticky note saying, hey, I love your house. I'm very interested in purchasing it, and stick that note on the door. They'll give you a call when they get it. Also, your warm market, letting people know that you are there to help people out of bad situations in their real estate, and that you're looking for people in financial struggles, people who are about to be foreclosed on, families that are going through divorce, you can help these people exit their real estate without damaging their credit. Letting your warm market know what you're doing will translate into a ton of referrals in your inbox. Now, one thing to keep in mind as you're categorizing your lead generation is to remember your investor DNA. Now, what is your investor DNA? Well, you have to stop and think to yourself, what set of problems and what set of benefits do I want to take on? Are you a high-end real estate investor? Do you want to invest in high-end properties? Now, remember that with high-end properties comes a high-end cost, but also high-end problems come along with high-end properties. You're going to be called a lot more for very, very silly things by your tenants. You may, with a low-end property, you may be called only if the house is burning down. Whereas on a high-end property, they'll probably call you when the garage door opener runs out of batteries. So with those high-end properties comes those high-end problems. Also, one of the benefits of high-end properties is usually it comes with a higher cash flow and higher income. Now, there's also mid-range properties. This is your standard middle-class neighborhood. It's going to come with a moderate cost. You're going to have some middle-class problems, and there's moderate income. But the nice thing is because of the lower cost, you can invest in more properties at once with the same amount of money. You may decide that you're interested in low-end properties. And with that comes a low-end cost, which means you can spread your capital out and purchase more real estate. But with that low-end cost comes all those low-end problems. Usually you're renting to low-income individuals that tend to distress your properties a little bit more. However, on the flip side, they are easier to rent. Now, going into some of the lingo of real estate investing, we talk about property classes by grading them at A, B, or C. An A-class property is high-quality tenants, safe neighborhoods, low turnover, and low vacancy. A B-class property is usually mid-quality tenants in moderate neighborhoods. C-class properties usually involve low-quality tenants in crime-plagued neighborhoods with high turnover and high vacancy. Now, anything beyond that is considered war zone, and that's where we start talking about becoming a slumlord. So it's up to you what class of property you invest in, and it really comes back to your investor DNA. You get to decide where your personality fits best. Would you rather deal with those high-end problems, with low-end problems, or maybe you fall somewhere in between? You get to decide. Now that wraps up our module on finding properties. I look forward to seeing you in the next module.